Joining us here for What a Week, we have Nick Kunze, Senior Portfolio Manager at Sanlam Private Wealth, Mia Kruger, Director, Kruger International, and Lindsay Williams, the founder of Strictly Business Podcast. Let's jump straight in, Nick, on the standouts for you for this week.
Okay, morning everyone. Yeah, I think for me, we have to talk about the 46th US president coming along, Mr. Joe Biden, and his inauguration. And for me, the standout was not just all the noise around it, was more the fact that everyone in Trump was talking about the US market all-time highs, that under Trump administration and Republicans, it was all about how he was business-centric. I mean, the morning that the Democrats got in, the market at an all-time high. So for me, it was not so much about who's president, it was more about the fact that it's all about the Fed. And if you look in the background, Ms. Janet Yellen is coming back with the printing press. So it was all about for me, it was completely about the continuity of the Federal Reserve and a Wall Street friendly Fed, as opposed to Democrats and Republicans. And for me, it was startling to see, as we all know, a Democrat government is not necessarily stock market positive. So it just meant to show. That was for me the highlight of the week.
Well, Lindsay, I know you want to come in, but I need to go to Mia here. I mean, Kamala Harris was the star of the show. And I actually used a barometer of watching their Twitter followings over that inauguration period to the next day. So Joe Biden, as of yesterday, moved from 4 million Twitter followers to 5.3 million. I hope he gained a couple more overnight. Kamala Harris went from 7 million Twitter followers to 15.9 million Twitter followers over that inauguration. She is the star of the show. Come on, Mia, get your thoughts there.
No, I mean, absolutely. I think if you consider what Biden has done in the run-up to the election, and then now with the inauguration, he's really placed her sort of in the front, and he's actually given her the star seat. So that's a great position that he's actually taken, to take the back seat, to be there with guidance, and actually offer her the opportunity to be in the limelight. And I think, just considering gender equality being a big theme of the last year, and actually much longer than that, but especially in the last year, this is a great position for them to take on the White House.
Don't you think,
as the mother of a daughter? Wait, I'm still on the Kamala Harris point. As the mother of a daughter, and I know you are the father of a daughter, so I borrowed that quote saying, teach your daughters less about fitting into glass slippers and more about shattering glass ceilings. I hope you are doing the same for your daughter, sir.
I've always been a champion of equality, I have to say. I mean, I don't want to get too goofy about it this morning, but I always have been, because I actually believe that women are better leaders than men, because men are driven by ego and testosterone and stuff. But what I wanted to really say was, again, before we get onto the market action with Nick and Mia, Bronwyn, is the sense of relief that Trump has gone, this monstrous person who should never have been there in the first place. It's almost as though the market has front-loaded itself, and our emotions have front-loaded themselves in 2021. They've said, goodness me, thank goodness he's not there. I mean, I miss his tweets because they were quite entertaining occasionally, but in a bad way. So every single day, I would start my day on a negative, and now he's disappeared. And I don't know, it's like the clouds have parted, Bronwyn. I don't know if you agree with me on that.
100%. I think we are all feeling that euphoria, and that there is significant change happening with people, good, kind, honest people being celebrated. I don't know how else to put it, but you're right. Let's not spend too much time on this. Let's dive into those markets. And yeah, we've got the standout from Nick. From your perspective, South African interest rates remaining on hold. No surprise there?
Yes. No, I mean, no surprise there. I think, we're in a tight position where an increase or a decrease in the interest rate would have been negative for the rand. We are trying to attract, investment, foreign investment specifically. And it seems like, when I consider the numbers coming out from investment into the bonds and to the equity market year to date, we've had a net investment from foreigners into those two. So the last quarter of last year, we had an inflow, which was great. It's definitely the turnaround of a trend. And then the first week, unfortunately, we had a strong sell-off that went along with the rand that actually just bombed out from the strong levels that we saw it to over 15.50 basically, and it came back. So the sellers came back to the market, and I think it's all sort of tied together with the fact that the markets are more positive with the new president coming into the US, with Janet Yellen coming into the market and supporting Biden's big plan to give more money to citizens, and it'll just drive the market further. So I think there are a lot of drivers. And then when you consider the fact that we've also this week again started with the earnings season from the US, it kicked off with Netflix, which just sort of blew out everyone's expectation around subscribers. It had 2 million more subscribers than they actually anticipated it to have. They anticipated it to gain about 6.5 million, I think, and it gained 8.5 million. So that is a massive difference in numbers. You know, there are lots of talk around that. I won't go into it, into too much detail, into the content and how they'll keep on developing all this content with all the lockdown restrictions. But the fact is we've got vaccines on the cards. People are already being vaccinated. We're hoping that it'll make a difference. No one's expecting it to clear up Corona completely, but at least it will start making a positive difference, and people will start to get their livelihoods of moving around back, and that will definitely support all these different sectors and the market further. So there's more tailwinds than headwinds at this stage.
Nick, you've got to come in here because we're talking about tailwinds rather than headwinds. The market has gone to, well, the market, when I say the market, I mean equity markets, whether it be South Africa or the S&P or in Tokyo, wherever it is, have consistently gone to new highs. I just wonder if people are front loading a little bit too much. They've said, okay, Trump's gone, what a relief. It's the new year, what a relief, because it's not going to be as bad as 2020, and COVID will actually be eliminated to a certain extent this year. So people are just saying, let's get it all in right now. And maybe it's a little bit too soon, a little bit too quick.
Possibly. I mean, just reiterate what Mia said. You know, finally we're starting to, you know, we can concentrate on earnings season. You know, the last few months it's all about trying to second guess vaccine recovery curves and whatever Trump was going to tweet. You know, finally we can actually get back to what do we do best and look at earnings, look at companies, see what they're doing, and it's all about earnings with companies, and we're starting to see positive rhetoric. But on the flip side, I mean, I've always said, and I've said it to you before, you know, sometimes you've got to trade what's in front of you, not what you think. And right now, the market's the sort of area of least resistance is to the upside. So the market's going to grind higher with liquidity, with central banks, with Miss Yellen printing. It's going to continue grinding higher. But, and I do err on the side of caution, and I agree with you that, you know, we are looking forward. We're looking into, you know, things getting better. Markets are forward looking, and there's light at the end of the tunnel. But goodness me, we have to like really squint to see that light, because there's a lot already, I think, priced in. But at the moment, it is going to grind higher. But yeah, I'm just a little bit nervous that, as you said, MSCI world new highs, Asian new highs, S&P, Nasdaq's up 102% as of last night from its lows in March. It's a little bit too quick, too soon. But you know, we'll take it for now. But there's a little bit of caution starting to come in on my side.
Mia, I also want to, you know, we started this conversation last year about the trends that will prevail, and the stocks to stay away from, the sectors to stay away from, given our new reality and this accelerated digital advancement that we've seen over the last year. And of course, the Netflix numbers speak to exactly that, the online environment really garnering momentum. And just to talk about our own experiences in the Nielsen network this week, we've linked up to 25, by the end of today, it'll be 30 countries across the African continent over just 8 short days. And we've been running simultaneous conversations, 3-hour-long conversations, linking up Mali, Niger, Sierra Leone, Equatorial Guinea, and Gambia, to name just 5 of the one contingent. The thought of needing to get onto a plane again, I mean, what we've actually seen, in motion this week is we talk about this free movement of goods, services, and people. We saw the Africa Continental Free Trade Area officially going live on the 1st of January 2021. And we're actually seeing the seamless delivery of services across the African continent completely viable at the moment. So it's just those trends and what will suffer versus what is going to continue to do well.
I mean, absolutely. We spoke about this, as you mentioned. We started talking about the trends and how they're playing out, and everyone has different opinions on it. But I agree with you. What I've seen is that there's we've all seen it. There's a definite shift. There has been a definite shift in how people live their lives and where they find their livelihood. And something that came out this week that I particularly like linking to this conversation is the numbers from Richmond. And when you consider how people in China specifically and the East are changing their habits towards luxury goods. While one of the things there is definitely the fact that the middle class have grown significantly just from the numbers. We know that about, in the 1950s, 20% of, then it was 90% of the middle class was actually based in the US and in Europe. Now, already 20% of the middle class is based in China alone. And the expectation for that is to grow in the next 6 years to 25%. So that's a significant number. As these people, move into the middle class, they've got more disposable income and they can't travel. So they're actually spending all of this on luxury goods. Now, the challenges for these companies, especially for Richmond, and we saw this now in the numbers, is the fact that they've always been a look and feel company. They want people to come into the shops. They want them to experience the luxury, have the whole experience around buying any luxury good, whether it's a watch or whatever the case is. And now they can't get that. And it's interesting to see also the drive. They've now sold about 27% or 27% increase in the last quarter in their sales in China alone, compared to a 20% decrease in Europe. And initially I was worried until I saw that China and the East actually makes up more than double what the sales in Europe already make up. So the fact is, when you consider that, the decrease is even smaller compared to the increase that we're seeing from the East. And millennials are actually driving this in China, and they're all spending time on their phones. They're used to buying online, and they're doing it seamlessly without worrying too much about the whole luxury experience. So it's interesting trends like these that I wouldn't have anticipated people who spend less on travel to spend more on luxury goods. But it's interesting to see it play out and support a company like Richmond. We've seen the share price fly. And I think it's just so interesting to watch what's going on in the markets.
I think we come to you on this one because it's interesting that Mia talks about the retail sector. She's been talking about the luxury sector. I don't know if you want to show us your wrist and see if you've got anything dangling.
Garmin.
No, I don't want to.
No. Anyway, we've had Richmond this week, and then at the other end we've had Massmart. We've also had last week on Friday, just after the market closed, we had Truworths, and then TFG started to hang on to the coattails of Truworths' results, and Mr. Price has been there as well. So it feels though, Nick, as you're a market man rather than an economist, it feels as though the foreigners are nibbling at South Africa, which is great news. And you don't need a lot of money to nibble at South Africa, even though we've been trading 21 billion rands worth per day on the JSE.
Yeah, look, South Africa's got a lot of things wrong with it, but it's also got a lot of things sort of going right with it. And I guess from an investing point of view, what we do have going right is that we're cheap on any basis, relative basis, a PE basis. What we are against the other emerging markets, we're cheap. And as Mia said in the intro, we're starting to actually see for the first time some positive inflows and foreigners buying, and that's exactly what we need. South Africa's gone from being almost 10% of the emerging market MSCI index, I don't know, 12, 13, 14 years ago. We're less than 1% now. Well, I think we're just over 1%. So the problem we've got is that when someone comes in, or a big house comes in, or a fund and wants to buy EM, automatically they're picking up 10, 15% of China. They're buying, goodness me, they're buying 1% of Ghana and Botswana, and South Africa's just 1% now. So it doesn't even move the needle, Lindsay. That's the problem. So when you do see things like this week and foreigners do come in, we are going to benefit because we're so small on the scale of things. So I think it's a positive turn. I'm starting to pick up more and more rhetoric. I think I spoke to you and David at the start of the week. Morgan Stanley put out a very positive note on South African shares and their dividend yields at the start of the week to their clients. So maybe we're getting a little bit of positive press for the right reasons. And with the whole turn away from politics and everything else sort of hogging the limelight, going back to old-fashioned valuations, earnings, etc., which makes South Africa starting to look attractive. So I mean, long may it last. And then on top of that, we've just had quite a few moves in the platinum sector. I see Mr. Nick Holland being replaced at Gold Fields as well. More positive stuff. Gold shares back in focus. So I don't know. I mean, I hate to mention it, but I mean, maybe it's a little bit positive on SA and SA shares 2 weeks into the year.
And of course, just on that note, Nick Froneman, Sibanye, also saying he wants to double the valuation on that company before he steps down. So quite an aggressive ambition there.
Yeah, and you'd be mad to bet against Mr. Froneman as well. He normally gets it right.
Mia, what do we need to look out for this coming week?
Well, I just quickly want to, finish the conversation on the retail numbers. And I think it's been a little bit too optimistic too soon. When you really look at the numbers, people read the headline and they misunderstand the headline and they jump into shares. So the retail numbers that came out actually showed us until November last year that we've had a decrease of 7.6% per year in retail sales. That's been the largest decrease in many years, by far worse than we saw in 2008 and 2009, which was about 4%. So that's the context. People are, and when you dissect the number, even the growth that we saw month on month into November, retail sales in clothing was one of the worst performers. So I don't know why people are piling into companies like Truworths, like Foschini Group. When you look at those numbers, it's not going well. We know we've seen more jobs lost during the last lockdown. So people's disposable income is becoming less. I doubt that people who aren't able to put food on the table or struggling to secure their jobs will be buying more clothes. They'd rather go for food, ShopRite, and those type of companies. I would by far place above the clothing retailers in South Africa. I mean, even for myself, I haven't been buying clothes. I haven't been going around much. So no one actually sitting at home needs much clothes. You need less clothes. So it's an interesting trend, and I think it's been a little bit premature the last week or so.
I'm glad you ended on, I could see both Nick and Lindsay reacting to the fact that you don't need a lot of clothes. So I can just imagine where that was going. So Lindsay, am I wrong? I can see it on both your faces.
I just think of you and clothes, and when we used to work together, every single day of the week, 5 days a week on that TV station that we used to populate, you had a different outfit every night. So I can't imagine you having the same attitude as Mia, because you always buy clothes.
I do have the same attitude as Mia, and there would have been a furore had I arrived in the same outfit Monday and
Absolutely.
Tuesday. Nobody would have listened to what we were saying. They would have gone, what's wrong with her? Wear the same things the same day.
We were sponsored. Yes, exactly.
True.
So you're absolutely right. It was you did it for your career, not for your own personal gratification.
Absolutely. It was an imperative. But we're not going to continue with that conversation now. Let's go, Mia, what can we look out for this week? Then to Nick. And then Lindsay, you're going to do us the honor of closing the show. But also, we do just need to mention the passing of Minister and the President, Jackson and Mthembu, taking everybody by, really putting some shock into the system yesterday. And of course, a very well regarded ANC cadre. And I think we just got to express our condolences to the Jackson family as well, to put our voice in there from the show. Yeah.
Yes, no, I agree. I think, what David Shapiro, who's also suffered a big loss in his brother over the last week, his condolences to him as well. What he mentioned last week was the fact that we as a people aren't doing well with COVID, but the market is doing well, and it's two completely different things. The economy and the market is different things. The market looks forward, the market anticipates what will be happening in a year, 2 or 3 in the economy, and that's what it reacts to. So expecting for the next week, what we've also seen last night and this morning in the East is the markets have actually sort of tempered down the optimism that they've started running with during this week. So they've actually just come back and relaxed a little bit. And I think sort of next week could be a case of, depending on what we see from the earnings, which I'm expecting to be better than anticipated. But if the earnings drives the market, we'll see a positive market. Otherwise, we'll just see a sort of a bit of a toned down emotion regarding, the optimism that we've seen over the last week.
Nick?
Yeah, all of the above. I think Mia's exactly right. We need to, earnings season continuing in the States, need to keep an eye on those numbers. For me, I've been watching quite a close eye on the 10-year yield curve. That's been quite an important one for me, that steepening curve, that stronger dollar, which is catching everyone. Every weekend on a Friday night, they supply the commitment of traders report, which shows you the open interest in the derivative positions. As of last week, the short dollar positions were the biggest on record. Everyone and their dog is calling for the short dollar. I'm watching this weekend and tonight that maybe we see a little bit of a short squeeze, which would tie in with, I think, my theme as well, that maybe we get a little bit of a pause next week. So I'm expecting a bit of a softer week, and as we start to get back to business, get back to what we do. But I think the risks are elevated to the downside for me, but we'll see in the weeks to come.
I think there are two opposing forces, Bronwyn. There's the Janet Yellen factor and the big expansion when it comes to pumping the economy, and not artificially, but certainly pumping up the economy because of the dire straits that we're in at the moment. And I don't think anyone realizes the dire straits. We'll talk about our personal issues and certain associates' dire issues. I think the fact is that we have, on the one hand, commodities going through the roof. The Commodity Research Bureau index, for example, going from 120 to 190 in the space of 9 or 10 months, and that's a shopping basket. It's not just a financial services index. It's a reality. So we've got that. But on the other hand, we've got people suffering. So I think the next, as I've said, Bronwyn, the next couple of quarters are going to be incredibly important. So opposing forces is my theme for the day.
And so does that have something to do with the butterfly and the elephant behind you? Are those and the duck? I see a duck, a butterfly, and an elephant. The opposing forces in that?
I like stuffed animals, Bronwyn. What can I say? I want to, if I can leave one thing for my children, it will be a taxidermy.
And Lindsay, and you can do us the honor of closing the show.
Okay, Nick Kruger is from Kruger International. Brilliant as always. Nick Kunze making his debut on What a Week. He is from Sanlam Private Wealth. Bronwyn Nielsen, of course, the clothes horse, and so much more, is the supremo behind the Nielsen Network. And I'm Lindsay Williams from Strictly Business Podcast, and we'll see you next week.